Hello traders, today we are going to analyze volatility and ready index. So as usual, you need to start looking for the market at higher time frame and identify the major zones. So as you can see, this market at weekly time frame, once you are in weekly time frame, monthly time frame, once you activate this period separator, it gives you the range of annual range. So this is annual range, annual range, annual range. So this is the price action at 2017, 2018, 2019, 2020 now. So you need to identify the high and lows. So according to this price action for all 3 years. So here I take a 1, 2, 3 years. Why? Because of the price action happening here. So sometimes you find that maybe I will take only 2 years. I consider only 2 years. But for price action of here, I need to consider these 3 years. Why? Because there is a structure level here. They break it, they come to retest it, then they go down. So this is a key structure level to look on it. So as long as Soko play below this level, it means we still in a long term, maybe market is still pushing down. But once they come up above this level for long term, the market will start going up. So at a higher time frame, it means the market is still bullish. So this is the low of this year, 2017. Then there is also lowest point of this year, lowest point. So highest point of this year, it obeys the lowest point of 2017, which is now it was support. Then they break it, they come to retest it, double confirmation. So they obey this level, this structure. So they retest here. So there is no need, if you want to put it, the highest point of this year is this one. So they create like a buffer zone, the high and the low. High of this year 2018, and this one is the lowest point of the and this one, sorry, this is not the lowest point of this year, is this one, sorry, is here, this last candle here, this is the lowest point. So this is the structure for maybe law of another laws, maybe law of the monthly, law of the week here. This level is according to the price action here. So once you finish to identify this, so the high of this year is here, but there is no need to put it because the market not yet reaching here. So on these levels here, it is enough. This level near the market where it is now. So the lowest point of this here, this one. So also they create a small buffer zone here. On the weekly you cannot see it well, but maybe once you go to lowest time frame you will see it. But the lowest point of this year 2018, it is this candle here. This one. this candle here. This is the lowest point which market moves from this here. And the lowest point of this here is this one of 2018, and the highest point is somewhere here. So what you can do here, you can adjust this one. Once you put this one, you can adjust this level here to come to be the highest point. You see, the highest point of this year of 2018, the highest point is this one at January, the month of January. This candle, the highest point is somewhere there. So you can adjust this level to put here. So once you put this level, in order to avoid it to draw many lines, because once you put this one, it was like here, then another one you put here, there is no need. You need to adjust this one to create a buffer zone. So it means the market moves into this buffer zone, price action at lower time frame, then it goes up, it break, it retests, then it goes up. So this is the level to look on. Then because this year is not yet finished or complete, so there is no need to put any lines, because they respect this previous structure of the other years. So as you go to weekly time frame, you come to daily time frame. Then I start looking where the market it is now. Here, the market it is here. So the quick picture which I get here, the market was pushing. So what I know, the market cannot push like this all the way. Maybe the market, if it is going up, it is not pushing like in a straight. They create waves. So here, this is the push. So what we expect here is a correction. So this correction, we needed to capitalize on this correction, correction or pullback, which will be happening. So this is the daily time frame. So in a daily time frame, I expect the market to push until here, until to this level, because here, and there is no need for you to start making confusion on these other levels. Yes, you can draw them, you can put, but the previous structure, the valid previous structure is this one. So this one is happening while they go up and then they do retest, because they automatically they were respecting one of the previous level here. Once you look at the left side, so only this level here will decide once the market is going to make the pullback. If they reach here, this level will decide if the market will bounce here, then going up again, or they will continue to drop down. So once they continue to drop down, you consider this level push, exhaustion. So there is this level. So what I expect is market to push from here to here. So this is so at the daily time frame, at big picture, we have already seen what the market needs to do. Even if you can check for fib level from here to here. You can see this level is around 61.8. 61.8. This level is around here. So the way to use this fib, why not at 36, why 30, not 38, why not 50, why at 61? Because there is a structure level here. Here there is a level. So once we finish to look at the daily time frame and see what will happen, what we expect the market to do, then we come down to another lower time frame, which is H4 time frame. So here, as you can see, they already create for us this reversal pattern here. So they don't create it for accidental, they create it you see this reversal pattern purposely. Why? They want to go down to do this retracement here, this push. They want to create this push. That's why you see this reversal pattern, hand and shoulder pattern. So if you are not entering to the market, if you are not capturing this high here, you need to wait. If you are not capturing this high here, you need to wait the market to break this level to retest, because this is the neck. This is a neck to retest, to break, to retest, then this is area where we can look for the selling opportunity. There is no way they will go down instead of breaking this level and retest it and showing here the rejection plus confirmation candle for to sell. There is no way. So we need to wait for this level. They break this level, simple price action. They break this level, they retest, then they go down. So once they break this level, we know that they break also, not they just break this level, also they break the neck of this head and shoulder pattern. So once you see this kind of price action, you need now to start focusing on selling, place your order. Otherwise, for someone who entering now, he needed to understand where to put his stop loss. The stop loss, you need to put it here, above this level here, somewhere here. So you need it. If you have already selling here, you need to put stop loss here, because what they can do before they break this level, maybe they can come again a little bit here, somewhere, you see, somewhere here, then they will retest and they will do a lot of trap here. So but to be sure like 99%, you need to see they break this level plus they retest it, then a rejection, confirmation candle, we go down. So there is no way they will go down without doing that. Otherwise they will not going down. They can come also. So that's why I say it depends on you, where you other they can put stop loss here at this low here, other one they can put here, other they can put here. But also if they fail to break this, forget about this head and shoulder pattern. Maybe they want to go to form another pattern, which is head and shoulder, which is M setup, then they come down. So you need to understand this. Once you understand this, this is like a trap. They create this head and shoulder here because everyone can see this head and shoulder. So if you are not this, a person who is safe here is the one who capture this high here. If he sells somewhere here, for him is how high is okay, because maybe now he put his stop loss at break even or a lock profit somewhere. So for him or her it's okay. But for someone who not yet entering the market, you don't need to be hurry. You need to wait till they break this level, then they retest, then they come down. Otherwise you will see they come to retest again this level. Or they can also, you need to understand, they cannot even, once they come up, if they fail to go down, they will come up again, they break this level, and also they can come down again. That's why always we need, once they break the level, we need to see they make it a retest. So if they come down and you see they break this level again, they don't, once they come to retest, there is no rejection, there is still, they are pushing down. It means they may create this kind of pattern again, biggie head and shoulder pattern. Then here is somewhere where, because they will be breaking this level again, so you need to wait for retracement. Once they come to make a retracement, once you see a rejection plus confirmation, then you know that they come also down. So this is kind of the, this is now is a trap. If it is true they want to, for now, if it is true they want to push down, there is a much selling pressure here, we need to see if they want to come here, we need to see they break this level, they retest it, then we need to if we see a rejection plus confirmation candle, then we go down. So this is what we need to see. Otherwise they will not go down here. Maybe they will only do a fake breakout, then they come up again, then they can respect this level, or they can break it to create another big head and shoulder pattern. Or if you see rejection here plus confirmation candle, then you know that they come up down, because they will be creating M pattern. So you can wait for that breakout plus retest at this time frame, because here, as you can see in H1 also, there is this pattern here, they create this pattern, they create this pattern. So M pattern, so we need also, even in H1 they say that we need to see this price action, tells you everything, then retest on this neck. So what you need to wait here at H1 time frame, you need to see the market, they break this level, then once they come to retest, a rejection plus confirmation candle, then we know that we are going down. Otherwise, once they come to retest, even in H1 it tells you everything, so they can make this breakdown, this breakout. So why we need to see a retest, we need to see a retest to test this zone that they break, it was support. Now if it is true, it is becoming a, because once they break this, it becoming a resistance. So to know that this is a strong resistance or not, so once you see, once they come to retest this level and you see that there is no rejection, they continue pushing up, they break it again, so you know that this was the fake breakout. This is the sign of this breakout to be a fake breakout. So but we will confirm that it is fake breakout once they come to retest it again, because it becoming now a support, because they break it. So this level is becoming now a support. Once you see they come to retest, they give you there is a rejection plus confirmation candle, we know that. So we confirm now this was a fake breakout, because they will create this pattern, inverted head and shoulder. Why? This will be a left, right, this is head. So it's like that. So that's why we needed to see every time once they, because this pattern they create by, they make a lot of traps, a lot of noises. But once you understand this, because here this is the M pattern, so if this is M pattern, they create M pattern here. So what we need to see, we need to see they break this neckline. Once they break this neckline and they retest it, once you see rejection to this level plus confirmation candle, we know that they will continue to go down. They will continue to go down. Otherwise, if you see they break again this level, you need also to wait for this correction. So once you wait to this, I mean to this retracement here, once you see rejection plus confirmation candle, so you know that they are not coming to test only this level, but also they create a certain patterns. What pattern? So you forget about this M, then you see that you start getting this head and shoulder, inverted head and shoulder. So you know that, okay, once they create this pattern, if they create this pattern, you know that they come to test it. Not here, not here. They come all the way up, or they can continue to push up. They can also continue maybe to push up to break this level here. You see, so you need to understand those stuff. So you are if to buy, you need to see kind of pattern like this. So your job is to capture this entry here, somewhere here. So those are all those scenarios for buying and selling. I mentioned them. So what you need to see this projection which we draw. You need to see the market made one of the projection, make it, or creating it. So this is line which we draw here, like this M which I say here, the yes, because the market already created it and I see it. So what I need to see now, what I need to see, this is the neck. So this projection which I draw here, for me, in order to sell, I need to see this projection. The market create this. So this is just a line. So I need to see the market to draw these lines, this projection, market creating it. So once they push, so I know. So you need to wait and see this setup. If you are not seeing this setup, it means they will not come down here, never. They just do some fake breakout here, they will come up again, up, we will start seeing they create another pattern here, then they come up. So if it is true they need to go down, it is must they will do this. It is must. If now they need to go down here, they will create this kind of movement. So you need to understand that, because once they do this, you see rejection, you know, to higher time frame, to daily time frame, we know that they need to go down to for corrective waves. They need to create a corrective waves, because they already create a push. Then we need to see they were creating a push at daily time frame, so we need to see them at least they go to they create this corrective wave or impulse waves to somewhere. Then then to do this correction we need them to see, because at day time frame this was impulse, so we need to see them they create this corrective. So push and exhaustion, this is the push, we need to see a correction. This push, to another name they call it, you can call it impulse wave, impulse move. This corrective move, you can say it is exhaustion or correction, whatever, but once they move, they don't move like a they reach to the zone. No, they create this movement: push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push. Now kind of consolidation. Then, so this is what they want to do. So we need to understand those stuff. Like here, they were creating this same pattern, but we know that if they here, once they were here, if it is true they were this reversal pattern was valid, they want to go down, only you need to consider this level here, this neck. If you need to see them, they break, not break. You see, this is breakout. As always I say to my video, another video which I speak once I do analysis in Swahili is my language. So once I always speak to those videos. Once you see this kind of breakout is a breakout, but this kind of breakout, as you can see with your eyes, it is not a strong breakout. Strong breakout, always you see a big move, not the candle like this noises candle. You see a big move, a strong push, you see a strong breakout. So this was not a strong breakout. So if they were want to go down, we see a strong momentum, a strong breakout, then we wait for this retracement, then but they didn't do that. That's why only this breakout was a fake. This was a fake breakout. Then they go up, then they continue. You see, they continue, then they came here. So the same here. If they will not break this level, strong push like this is just a projection, but even if they come up to here, whatever, but you need to see that breakout is a strong breakout. Then you wait so the confirmation, you wait for retest to this zone. Once you see a rejection plus confirmation candle, then we sell. So leave them, let them play here. They will play as much as they want, but once they do this push, then we wait for a retracement. So once they come to test this zone, we wait them to this zone here. So this was a volatility 100